Welcome back to the deliberations of the Citizens Monetary Policy Committee. We have with us Chairman Dr. Sen and members Sonal Verma, Sajid Chinoy, Samiran Chakraborty and Shaumikanti Ghosh. Samiran, let me start with you now. You put on the table the fact that there are soft spots in growth, but core inflation, etc., are picking up. So do you think that it makes sense to warn and therefore change stance, but is it too early, you would say, to hike rates?
That's probably the most debatable discussion, that as an inflation targeting central bank, can you really risk falling behind the curve, at least from the eyes of the market's perspective? So if we just look back from April onwards, we have got two inflation prints on which, depending upon which core inflation measure you like, it has gone up between 50 to 70 basis points. You look at oil prices in INR terms have gone up 16%. Now, not fully probably passed on into retail prices as yet. So if you think of these building up of inflation pressures, then in our view, probably it's better for the central bank to start early rather than wait for the August policy. Yes, the big uncertainty is on MSP, which will probably get clarified only after the MPC meets. But at the same time, if the MSP leads to some sudden spark in prices, then in August it might look to be too little, too late, and who knows, there could be pressure on the central bank to act more if they delay the first rate hike. So in that sense, probably it makes sense to start early, given that the inflationary pressures are now quite acute and quite visible.
Okay. Well, let this be a little more freewheeling. Sonal, I mean, what is the point of this rate hike? Will it make a difference? I mean, the yield curve in India is looking like it's already factored in 2 or even 3 rate hikes. The 10-year is at almost 7.9, 7.85, 7.9, and even the 2-year is at 7.5 to 7.6. Will this rate hike make a big difference to the cost of money practically?
That's a very important point, Latha. I mean, market interest rates, bank lending, deposit rates have all moved up despite, policy rates being status quo. So an implicit tightening of financial conditions have happened. So the effectiveness, though, I think the signaling impact of a policy rate move cannot be discounted. The core inflation numbers in the month of April are clearly extremely alarming. It's sort of consistent with the domestic demand pressures we have seen, which is reflected in the growth numbers. The incremental upside risk to inflation because of oil, INR, and various factors would suggest that, with already the pressures being quite high and upside risks, clearly the deviation from the medium-term target is now clearly visible. And second, like I mentioned, the macro stability considerations given the rise in global risk premia is something that India as a current account deficit country cannot really ignore. So yes, the tightening of financial conditions have happened. That may lead to some moderation in growth, but the adjustment on the policy rate front, and particularly from a signaling perspective, particularly given that we are in the very early stages of inflation targeting, I think the credibility cannot be underestimated. And therefore, given the lags anyway with which monetary policy works, the sooner would actually be better. Okay.
Let me put one more thing on the table, inflation trajectory. Sajid, will the Reserve Bank have to and the MPC, and will all of you have to willy-nilly revise your inflation target upward? The last policy brought down the March forecast, brought down the first half forecast for the current year, and the second half forecast by 10 basis points. Will some of these have to get reversed?
I think they will have to get reversed, all of us, and the process of doing that. I think, and to be fair, there are lots of moving pieces. Food prices have actually not picked up as much as we thought in the summer. There is not enough clarity on the MSPs. Everyone thought 6 months ago oil cannot breach 55 or 60. It's now closer to 80. The dollar has strengthened 5% in the last 6 weeks, so lots of moving parts. I would pay less attention to the inflation forecast in the next 6 or 8 months because there are so many base effects in opposite directions that you get a misleading picture. The next couple of months inflation picks up, and then in the second half of the year you get the benefit of the fact that you had the HRA allowance the previous year. For me, the first clean reading is Jan to March 2019. That's rid of all these base effects and HRA and GST impacts. So I think while the RBI will move its inflation forecast at some point, pay close attention to where the RBI thinks inflation is in the first quarter or the first half of the calendar year 2019. That's really what should drive monetary policy. Our sense is that's currently tracking 5% with some upside risk, and that should be enough to move rates. Let me just say one final thing. I think all of us agree that some monetary tightening is inevitable. I think it matters less whether it's June or August. I don't think we should panic. This is not 2013. India enters this episode with far better macro fundamentals compared to 2013, far more buffers in place. The rupee has been doing just fine in the middle of the pack. So the trade-off for the MPC is, do you want to be proactive, for which there is a good reason, and move in June and signal to markets that we are willing and ready? Or do you want to have more communication continuity, given that I cut my inflation forecast in April, I raise the inflation forecast, formally change my stance, prepare markets that the rate hike is coming in August? I think if it's a decision between June and August, I'm not sure these things matter, as long as the communication in June is appropriate if they don't raise rates.
But liquidity matters. So irrespective of what the policy would be, would you not want to hear something on liquidity? Already, balance sheets of the entire Indian banking sector has been crunched for want of capital and for want of provision, and because of provisioning pressures. What would you want to hear on liquidity? Would you want the MPC to advise that liquidity not be made tight in that sense? I mean, what should the MPC do?
See, I think that's a very good question. I think in terms of the liquidity, if you actually look at the total core liquidity adjusted for the government cash balances, that actually had turned negative 2 days back. Yes. Today it is positive. So irrespective of whether the RBI gives a signaling device to the market in terms of a rate hike or change unchanged, I think the markets have already factored in, and the markets are in a very liquid tight spot. And the bank will continue to raise lending rates irrespective of the RBI signal. So that means that the signal to noise ratio, basically the signaling which the RBI gives and the noise which the market emanates in terms of, for example, the volatility in the yield, that has actually been elevated. So I think it will be on the best thing for the RBI to address this signal into noise ratio. Otherwise, this financial instability component which has crept into the market should actually be curbed. And the other,
no, should they say we are moving away from neutral liquidity into tight liquidity?
No, they should not say that, because liquidity is already tight in the market, and the banks are already raising rates. Deposit growth is on the lower side, and credit growth, if it picks up, deposit growth could the liquidity could actually be a problem. So I think instead of saying that, the central bank should stay on course on what is doing on the liquidity, but there should be a clear communication that this is my stance on liquidity, and what I want to do in the future date. I mean, that will be clearly laid out.
I have to go to the chairman for winding up comments, but I give you all each 10 seconds. Liquidity, Shamiran, what should the MPC stance be?
I think it's very tight, but it's not so much in MPC's domain, but in RBI's domain, and liquidity needs to be eased at this point.
I would think the MPC would have the authority to advise if they wanted to. Anyway, what would you do?
I would not change the policy. The policy has worked well the last couple of years. Stick to neutral liquidity. Given our forecast, core liquidity goes into a deep deficit later in the year. From September onwards. They will compensate that through the provision of durable liquidity. I would not, at this point, move too many things at the same time.
Okay. But Dr. Sen, as the chairman, winding up comments, sir, and which way would you tilt?
Well, it's not a question of tilting yet, but I think one thing we should also keep in mind, that the signaling effect of what the MPC does should not just be focused on the market. There is another player who is equally, perhaps at this stage more important, which is the government. So if the government, remember we're coming into an election year, and if the government gets the feeling that RBI is actually holding back growth, you may see a reaction on the other side, which will undo whatever RBI is trying to do, and that becomes an unstable equilibrium. So one needs to be very, very, very conscious of the signal that's going to government. And I think the game that was played by Raghuram Rajan earlier, which is saying that if the government gives me credible evidence of fiscal consolidation, then I shall do X, Y, and Z, is not a bad way of going about it.
Okay, well, Dr. Sen, that puts everything on the table now. It's time for you, gentlemen and lady, to vote. Let me start first with the question, should the MPC hike rates or not? Hike or pause, Soumya?
Not yet.
Okay, no hike. Shamiran? Yes, a hike of 25 basis points.
They should
Sajid?
hike, but we're indifferent between June and August.
Okay, so you're not expecting in June. You have to vote.
Yeah.
Are you voting for a hike in June?
I probably would, but if it's August, it's, I would be indifferent.
You're
to that.
not voting for a hike. Should I take you as a yes or a no?
For June, yes.
Yes. Okay, Sonal, is it a hike in June or a pause?
Question is should. I think they should hike in June.
Okay. Dr. Sen, well, there is 3 hikes now in June. Samiran, Sajid and Sonal. Soumya says no hike. Dr. Sen? Hold. But you outvoted, sir, this Monetary Policy Committee, 3:2 votes for a rate hike. Okay, now for a change in stance. Soumya, is there a change in stance?
No.
No change in stance. Okay, you have to raise the board. It's a maybe from Samiran. Sajid? Yes, you have to tighten the stance. That's the point from Sajid. Sonal, what's your vote?
Tighten stance.
Yes, tighten stance. So 2 tighten stance, 2 not tighten. Dr. Sen? Oh yes, tighten stance. So 3 people asking for tighten. Clearly, the MPC is in favor of tightening and hiking. The final question to you, how many rate hikes do you expect in the current year? That is calendar 2018, 25 basis, 50 basis?
I'll look out for more data as of now.
Okay, so not vouching for anything. Shamiran, 50 basis rate hike this year. Sajid, 25 to 50 basis rate hike this year. Sonal?
50 basis
That's a
points.
50 basis rate hike. Dr. Sen?
I think I'd wait till the August
Okay,
meeting.
wait for more data. All
I
right.
think it's too early to take a call. Yeah.
Fair enough. But there is a definitive voice coming from this Monetary Policy Committee that a rate hike is called for. It is 3:2, so it's just 1 vote that is going in favor of a hike. In all probability, that's going to be the situation in the RBI's MPC as well. We know for a fact that Michael Patra and maybe Dr. Viral Acharya are going to vote for withdrawal of accommodation and a rate hike. So we will wait to see whether it is 3 and a casting vote. Thank you very much, members of the Monetary Policy Committee, for joining me.